welcome back to episode number 3 of the Journey to Financial Freedom series. So if you've been following along, the first video was on financial freedom or the FIRE number and determining what your FIRE number was. We talked about your annual income that you would like to receive once you become financially free. We talked about the pool rate. We calculated what that investment portfolio size needed to be. And then finally, we used the investment calculator to determine how much money we needed to put into our investments in order to reach that portfolio size in a time that was, ideal for us. The second video was going to be on discussing the differences of how to get out of debt. Do we use the snowball effect or do we use the debt avalanche? And going kind of the pros and cons as to which strategy might be more ideal for you, which one you're more related to in order to get that debt off of your back. In this particular video, we're going to be discussing what to do and how to open up our brokerage account, what banks I would suggest that you open your brokerage account with, and then there's 5 things that I want you to learn with this $1,000 that I'm going to speak with you in a little bit more detail as we get on to the next slide. And then finally, the 4th episode in the next video of this series is basically the journey to building wealth and what you're going to need on that particular phase of your journey. So I hope you continue watching through. If you hadn't seen episode 1 or 2, take a look at that. The playlist is down below in the description so that then you can click that. And then look out for the next video, episode number 4 on that journey to building wealth. So let's get right into it and let's figure out what we need to learn with that $1,000 that we have in becoming a advanced investor over the next couple of years as we get our feet involved in investing for our future. Let's get right into it. Let's get started with your journey to becoming wealthy. You have went through a tough time. Depending on the size of your debt, and by no feat, I want to congratulate you if you have gotten out of debt. For me, it was a large number. The amount of relief I had when I made my final payment, to say the least, was mind blowing. So now that you have gotten that, now it's time to start taking the money that you have been used to paying others and start paying yourself and buying back your future. And so the first thing that we're going to do is start with $1,000. And the reason that we're going to start with $1,000 is because it's an amount that I feel that is enough to get your feet wet. Once it's invested, it's enough to move so that then you will start watching it and seeing how the stock market, you're going to be checking your phone, checking your app, and today it's going to be worth $1,015, tomorrow it's going to be worth $975, and it's going to go back and forth. And it's going to start, producing all of those feelings and start opening up your mind to getting interested in investing. And so I believe $1,000 is a great amount of money to get started with. So the first thing that we're going to be needing you to do is open up a brokerage account if you don't have a brokerage account. I personally like a brokerage account with one of the national banks. They have a nice platform between B of A, Wells Fargo, Chase, Citi, whatever platform. If you already bank at one of those large ones, it's ideal to open up a brokerage account right with them because then you can transfer or deposit your money straight into your checking account, or whenever you get paid, transfer that money over. It's available immediately, and you can begin trading. If you're with a credit union or a smaller bank, I would actually push you towards one of the investment banks. So a TD Ameritrade, Fidelity, Charles Schwab. And the reason for that is because they have a very nice, sophisticated platform as well. I have seen, at least with the credit unions kind of in my area, their investment platform isn't as user-friendly as definitely the national banks. And then the investment banks have the best platforms out of everybody, in my opinion. But in addition to that, Fidelity, Charles Schwab, TD Ameritrade, they have other types of services that you're possibly going to be using in the future. I've done some videos on custodial accounts, retirements, And so as you start building your wealth and start getting more interested in investing, you're going to want to possibly open up these other accounts. And so it's nice and ideal to open up your first brokerage with a bank that gives the option to open up other accounts when that time arises. So again, if you already bank with one of the large national ones, try to open your brokerage there. If not, go to the Fidelity, Charles Schwab, TD Ameritrade to get your brokerage account off the ground. Take a look at your brokerage account. Your brokerage account that you open should not be charging you any trading fees. So that is definitely to keep an eye out for. Get a look at their fee structure and make sure that there's no cost to move your money in and out. There's no cost to make trades on the platform. And just make sure that you agree with that fee structure prior to signing up for any brokerage account. All right. So we got $1,000 into our brokerage account, and where do we start investing at? What do we purchase? There's so many options. There's so many stocks. There's ETFs. There's index funds. There's all these different, possibilities, and I have no idea where to start. I'm going to push you towards. I have 3 different options. There are other different S&P 500 and total stock market indexes that you can look at. These were the 3 that were on the top of my head when I was writing this PowerPoint for you. Is VTI, SPY, or VOO, VOO. These are going to be 3 options that give you what am I trying to say? Give you the spread of the total stock market. So with VTI, it literally has 3,000 or so stocks in this one particular ETF. SPY and VOO have the S&P 500 stocks within that index fund. And so that's going to give you a lot of diversification with purchasing one particular ETF. And the goal of this, and out of one of these options or whatever option you decide to go with, is I want you to realize after 3 months, 6 months, whatever the case may be, that the stock market is where you want to be. That the stock market can provide you your financial freedom. It can be a tool that can be used in order to build your wealth. So many individuals thus far have used that to build enormous amounts of wealth. And I want you to realize the power of the stock market by using BTI, SPY, and VOO. These particular indexes or ETFs are going to give you the minimal amount of downside risk because, again, they have so many different companies within those particular ETFs that it's going to take a significant downturn in the market for those particular ETFs to be worth less in 6 months, 9 months, a year. The stock market has produced 8% over the last 100 plus years, and so we're going to continue doing that. The S&P 500 in 2021 did like 22, 25%, and so having your money in these particular indexes is going to give you a good chance of being worth more in the future than it would be less. So this is why I want you to start with these particular ones and not getting into nothing too fancy just yet, just so that you can learn the feel and learn what it feels like to be an investor and be invested in the actual stock market. All right. The next thing that I want you to learn, and another reason why I pointed you towards these particular ETFs, is I want you to get some dividends. So that means you need to be in these particular ETFs at least for a quarter. To get more specific, as long as you own shares right before the closing date, you will be able to get paid out for that particular quarter. But without getting too specific, I can make another video on that. I need you to hold this investment for a minimum of 3 months so that then you're going to collect your first dividend. Your first dividend is a nice paycheck for owning shares of this particular ETF. You're going to get a check sent to your brokerage account via money just for holding the company or holding the particular shares that you do. So I want you to get a feeling for that because dividends is another bucket that you can use in the future to provide income. Now, it is going to be very small at the beginning. Owning only a few shares is not going to be anything major, but over a long period of time and building wealth in the journey that we're discussing, those particular dividends can actually get up to a nice size amount and provide adequate income in your retirement years. So I want you to get a feel of what it's like to get paid just for having your money invested in the stock market. So that's number 2. Number 3, which is the same kind of criteria, at least for a quarter, I want you to go through an earnings season. An earnings season is actually what we just started this on Friday, and earnings season is going to be going forward over the next 3 or so weeks. If you're watching this video right when it came live on the 15th of January. But earnings season is where all of the companies begin reporting what they did for the previous quarter. Whether they missed or whether they exceeded expectations, they start giving out guidance for the next quarter, the next year. And so you start hearing some of your favorite companies and the companies that you're invested in and how they're doing on a quarter-to-quarter basis. And so this is, again, just my hope is to bring excitement. Again, show that you want to be there. Get an idea of the services that you're using. Apple is going to be reporting. Google, Facebook, who else am I in? Tesla, all of the companies that you shop on a weekly basis, do business with, Netflix, Chipotle, McDonald's, all of these guys all of these companies are going to start reporting. And I want you to feel the excitement of hearing how these major companies are producing income and returns for you now that you're a investor in the company. And so you can get all of this information by downloading the CNBC app on your phone. And as earnings season starts coming through, you're going to start getting all these highlights or notifications as to this company did this for this quarter and yada, yada, yada. And so, again, it's just going to build excitement and show that you want to be in the stock market and get enthusiastic about quarter after quarter and the news that is going to be coming across your screen. The other thing, in addition to earnings season, we have a lot of things in between earnings season. So right now, as you might be aware of, we're going through COVID season and Delta and Omicron and all these different things. So there has been a lot of discussion with consistent CDC guidelines updates, unemployment numbers, jobless claims. What else is out there? The Fed meeting, interest rate hikes, all of this additional news. We're going to be coming up at the end of this year with an election cycle, so that always has a major impact into the stock market. And so I just want you to get a feel and see how all of this exterior news has a major impact into the stock market, so that then you can start planning and using this news, because a lot of this stuff is repetitive, to possibly use it as buying opportunities when the stock market goes down for a short period of time due to debt ceiling talks being failed and looking like the government shutdown is going to be occurring. You're going to start getting a understanding of how the stock market reacts to different situations that are going to be going out in the world. And so I want you to get a feel for that and an understanding as to how that plays with the stock market and why just because your particular ETF goes down doesn't mean that the companies are doing bad, but possibly because government or COVID or exterior factors are bringing fear into the market. It actually brings those particular positions down for a moment, allows you hopefully to buy in at a cheaper cost, and then 6 months, a year later, that stock in that ETF goes back up and continues on the journey that it was going to building you wealth for you and your family. Finally, and this was a big thing for me, our account is hovering right there around the $100,000 range. And so a 1% day for us is basically $1,000. And on average, since I've been in the stock market for 2021, plus or minus, it has always been 1% up, 1% down. Every now and then I'll get a 2.5%, 3% day. That's really pushing it. But I want you to get a feel for what a 1% day is. And I say that to say, and I use this strategy even for myself. Again, I have a $100,000 portfolio roughly, and so 1% day is a $1,000 day. Can you imagine when your portfolio is $1 million and a 1% day is $10,000? Or maybe you grow it to $10 million, $5 million, and a 1% day is a $50,000, $100,000. I mean, it just starts getting mind-blowing that, 1% day, which is pretty normal, at least on the ETF side. All I currently do with ETFs, I don't do any stocks. And so 1% day is very normal. And so to think that possibly our portfolio is going to be $1 million and a 1% day is going to be a $10,000 swing, and I have 2 or 3 of those days back to back, I can go take that $30,000 back in growth and go buy a car, whatever the case may be, in cash. Like, that is just my motivation to keep on going and keep getting excited. So I want you to see that 1% day, and you're going to be able to see that with your $1,000. You're going to see that a 1% day is what you made a 1% day in the stock market is what you made at work. And so it's just going to get exciting and get fun, and go back to that original statement at the beginning that the stock market is a place that you want to be at. So I wanted to start you off with a particular ETF that was very neutral, very safe, allows you to get your feet wet, learn the market, and then hopefully get that momentum and that excitement going so that then you can begin looking at other possibilities to put in your portfolio and or continue and adding to one of the original ETFs that you purchased. So I hope this kind of walked you through the process and what I really wanted you to learn when you get that brokerage account open and you get that $1,000 trading. And I look forward to seeing you at the next episode on the journey to building wealth. Please, if you have found value in this series, if you have found value in this particular episode, subscribe to the channel, and I look forward to seeing you at one of the upcoming episodes. See you soon.